today I'm from DelaCruz.
And I'm DelaCruzSantosFASBPresentation, and today we'll be presenting on Sears Holdings Corporation's inventory valuation methods and comparing them to the FASB regulations. Just a little introduction about Sears Holdings Corporation. It's reputable for being the leading home appliance retailer and a leader in tools, lawn, garden, fitness equipment, and automotive repair and maintenance. And they have stores located all throughout the United States and Canada. And they maintain its reputation through the operations of its subsidiaries, which include Sears Roebuck & Co. and Kmart Corporation. Unfortunately, within the past 6 years, Sears has had to close down 300 of its retail stores. And this is because they couldn't take their low-performing stores and make them profitable. So instead of wasting money on these unprofitable stores, they decided to focus their efforts on the ones that are already performing better. And one of the measures taken to make these stores perform better was to better effectively manage their inventory. And as you can see, we found that merchandise inventories decreased from $8.4 billion in 2011 to an all-time low of $7.6 billion in 2012. And this allowed them to have more financial flexibility.
Sears Holdings subsidiaries inventory are valued under the lower cost or market under the retail inventory method. The subsidiaries, which are Kmart, uses the FIFO cost flow assumption, while Sears Domestics use LIFO cost flow assumption, and Sears Canada uses the average cost based on the individual items. Sears Domestic uses FIFO. Merchandise inventory would have been $72 million higher at February 2nd, 2013, and $70 million higher on January 28, 2012. Next is the estimates. ROM requires the management to use certain estimates, which are the permanent markdowns and the shrinkage. Permanent markdowns are the clearance markdown used to clear unproductive or slow-moving inventory, while the shrinkage is the estimate as a percentage of sales for the period from the date of the last physical inventory to the end of the year.
Right, so another important aspect of inventory valuation is the way in which a company handles its purchases and sales. So through the use of estimates, Sears Holdings has been able to find that they need to increase its inventory, especially during its fourth period, because in 2010, 2011, and 2012, they found that 30% of their overall revenue comes from that period. And this is because of the seasonal nature of the retail industry. So especially when the holiday season comes up, they need to increase their inventory. And in order to finance this increase in merchandise inventory levels, they finance it through operating cash flows, where credit terms are resolved from vendors through its domestic credit agreement. In addition, Sears also receives various rebates and allowances from these vendors. These rebates and allowances are recorded as a reduction to the cost of merchandise inventories, which in turn reduces the cost of sales, buying, and occupancy as the inventory is sold. So this just shows how important it is to manage your inventory well, because it does have an effect on profitability.
The inventory level effects on the operating results are the excess inventory, importing of inventory, and clearing of inventory. So with the excessive inventory, the corporation must guard against accumulating excess inventory as they seek to minimize the out-of-stock levels across all the products category and to maintain the in-stock levels. In the annual report, Sears mentioned that they obtained significant portion of their inventory outside United States, which we think that the factors that affects importing of inventory are time, requirements, and the future demand. So the company and the management must purchase the inventory advance and must identify the future demand of the inventory, as well as it has to follow the requirements of the other countries in importing of the inventory to the United States. And lastly is the clearing of inventory, which affects the gross margin. In Sears Canada's gross margin rate declined 170 basis points in 2011 as a result of the clearing inventory due to the enhanced focus of improving inventory productivity. So the clearing of inventory affects the obsolete items that also affects the gross margin of the company.
So next we'll discuss how Sears Holding Corporation's valuation of inventory compares with the FASB Regulation 330-10-30. And the first is cost basis. Cost is the primary basis for accounting for inventory that Sears Holding Corporation uses. And next is the determination of inventory cost. As we mentioned, Sears Holdings uses the average costing method, FIFO and LIFO under the retail inventory method. And also for consistency, according to its annual reports, Sears Holdings has used the same cost flow assumptions and same methods throughout the years reported.
Next one is the US GAAP and IFRS similarities. ASC 330 and IAS 2 inventory states that the cost is a primary basis of accounting for inventory. The next one is the inventory is classified as assets, which are held for sale in the course of the business, in the process of the production for such sale, or to be consumed in the production of goods or services. The next one is the permissible technique for the cost measurements, which are the standard cost and retail inventory method. Under both standards, the cost of inventory includes the direct expenditures to ready the inventory for sale, including the allocable overhead, while selling costs and administrative costs do not include in the inventory cost.
So next we have the differences between GAAP and IFRS. The first one is in regards to costing methods. While it's okay to use the LIFO method under GAAP, IFRS prohibits the use of the LIFO method. It also requires that the same cost formula be used for all inventories similar in nature or leased to the entity. The next one deals with measurement. GAAP measures inventory at the lower of cost or market, while IFRS uses lower of cost or net realizable value. And next, we have the reversal of inventory write-downs. Under GAAP, any write-down of inventory to the lower of cost or market creates a new basis that subsequently can't be reversed. And under IFRS, previously recognized impairment losses are reversed up to the amount of the original impairment loss when the reasons for the impairment no longer exist. And the final one is deals with permanent inventory markdowns under RIM. IFRS reporting of the permanent markdowns affect the average gross margin used in applying the RIM. It's also not allowed to reduce the carrying cost of the inventory below the lower of cost or net realizable value.
In final analysis, Sears Holding Corporation has proven to abide to ASC 330-10-30 of the FASB codification.
And as long as Sears Holding continues to manage its inventory well, it can increase its financial flexibility, and this will help give them more room to focus its effort on improving store performance.
Thank you.